Hey, welcome back. As Ukraine continues its defense against Russia's invasion, the country needs money to survive. This week, the International Monetary Fund approved $1.4 billion in emergency funding, something Ukraine had been asking for. Earlier, I spoke to the IMF's first Deputy Managing Director, Gita Gopinath, about the economic impact we should all be bracing for. Gita Gopinath, thank you for joining us.
It's a pleasure, Rosemary.
I want to start with Ukraine, if I can. This week, the IMF's executive board approved $1.4 billion in emergency funding for Ukraine. How crucial is that money, do you think, to allowing Ukraine to continue to survive?
We are trying everything we can do in terms of helping the people of Ukraine and as fast as possible. So the money that we are providing to the government in what we call a rapid financing instrument is precisely to help the government very quickly deal with these shortages, to be able to pay their bills, to be able to buy the imports that they need to buy, to basically keep the economy functioning as best possible in these extremely difficult times.
I guess the other side of that, though, is Russia. And I know that there have been some reports that European officials were looking at curbing Russia's influence and access to financing at the IMF. What is your response to those conversations? Is that even anything that is, easily possible at the IMF?
Now, for all practical purposes, we don't really have any operations right now with Russia. We haven't lent money to Russia in decades. We don't have a program right now. Our office in Russia is not actively operational at this point in time. So, there isn't much of any kind of relationship going on and work related.
Sure.
To the question of financing, several people have pointed to SDRs that were issued to Russia, which is called special drawing rights, which is kind of a credit line that the IMF gives countries. But to use that money, Russia will have to convert that credit line into actual euros and dollars, which is, given the strength of the sanctions, the complex nature of the sanctions on Russia, it's just going to be very difficult to convert that into actual financing for Russia.
So is it even worth the IMF blocking access to that credit line, or is it your point that it would not go anywhere anyway?
It's not up to us to block the access. The allocation was made to Russia last year alongside all the other countries. Now it's up to the members whether they want to exchange those SDRs for dollars and euros. Again, I'm just saying that it's just very complicated to do this at this time.
Is there further action that the IMF could take, either to signal your displeasure with Russia's aggression or to support Ukraine going forward?
We're going to do everything we can to support Ukraine. The money that we've given, the $1.4 billion, is in addition to this $2.7 billion SDRs that were given last year. But of course, we know, just looking at the destruction to property in Ukraine, that they will need a lot more financing to recover from this war whenever it is over. And we will be there along with the other multilateral agencies to help them. To your question of Russia, the bottom line is that given the articles of agreement that we have at the IMF, we don't have any legal basis to exclude anything that Russia can do, because it continues to be a member of the IMF.
Could you foresee a world in which the members decide to force Russia out?
Well, we've seen the unthinkable happen in terms of a war in Europe. So at this point, I'm not going to speculate, but things are moving so quickly and rapidly that many things are possible. But I wouldn't speculate at this time.
Okay, I want to ask you a couple of questions more broadly about the economy. You were the IMF's chief economist, and in your final global outlook back in January, yes, you said that the global economy was in a weaker position than expected. That was, of course, when we were dealing with COVID, with Omicron. Now we're dealing still with I would say, with COVID, but also now a war. Where does this leave the state of the global economy right now, in your estimation?
At the start of this year, before the Russian invasion of Ukraine, we were seeing the global economy on track to recover very quickly from the Omicron wave. But now we have this major shock, and it is a major shock, and we will have our next forecast in April, but everything points toward the downgrade, just seeing what's happening at this point. In terms of the impact on different countries of the world, of course, where the epicenter is Russia and Ukraine, the effects are big. The financial sanctions in Russia are really going to slow down its economy. It's fair to say that they will have a deep recession this year. In terms of the rest of the world, the increase in commodity prices, look at oil and natural gas, wheat, corn, metals, everything has been rising very sharply. What that does is reduce people's real incomes, their purchasing power, and that slows down demand. And then that has spillover effects to the rest of the world, to international trade. So that's one major channel, and we're seeing countries with already high levels of inflation having to grapple with this. The second, of course, is countries that, like in Eastern Europe and Central Asia, that rely very heavily on trade with Russia, that rely on remittances from Russia. And now that they're receiving refugees, over 2 million refugees coming out of Russia, they're going to be also affected very hard.
Yeah, you paint a very good picture of where things are. And given the high rate of inflation in the United States, here where I am in Canada, I know there had been an expectation that it would sort of peter out almost sort of naturally as part of the cycle. But do you think that there's a chance that it will stay around a little longer than we had anticipated?
I think everything points to the fact that it will stay elevated for longer. The expectation was that the first quarter of this year was when we would see inflation peak in many countries and then come down. But as what's happening with the war and what we're seeing in terms of commodity prices, we're going to see headline numbers go up. And it's a very quick pass through from energy prices to inflation in many countries.
I'll just end on a last question about Russia and these economic sanctions. I certainly have never seen anything like them before. I'm sure you haven't either. Do you think that they will ultimately have some sort of direct impact on Putin's regime and the people around him? Are you surprised at the way in which the world has come together to do this?
We have seen unprecedented action on sanctions. This is, in the scale at which we're seeing this happen, is really, really large. I think it has implications, I would say, for the global economic order as we know it. Post this war, we know for sure that energy trade will no longer be the same. It will not look like the landscape we have right now. We're also seeing that the next set of sanctions will be on removing Russia from the WTO, the World Trade Organization. So these are big shifts that are happening. I think payment systems could get fragmented. Some countries might decide to hold a different basket of currencies as their reserves. So I think this is going to be quite an important event. And the longer it lasts, the more likely is it that we will see big changes in the global order.
Okay. Gita Gopinath, thank you so much for joining us. Appreciate it.
Thank you.